I'm Michael Harris, Head of Capital Markets for Citadel Securities, and I'm joined at the New York Stock Exchange with my colleague Pete Giacchi, who runs our designated market making business. So Pete, what is a designated market maker?
The designated market maker is specific to the New York Stock Exchange. Obviously, there's market makers, that have historically provided liquidity in the market. But on the New York Stock Exchange, we have a hybrid model where there's a physical trader and a systematic quantitative trading aspect to the business. So it's a really unique aspect that we bring to the public markets here. The real function of the designated market maker is not only as a liquidity provider, but it's also as a relationship manager to the companies. We shepherd companies not only through their first day of listing, but their life cycle, their earnings, their analyst reports. As the company begins to grow, and so we're not only providing liquidity to the public investors, we're providing a service to the listed client.
Now, designated market makers, or DMMs, that's the concept that's been around for a while. How has the role evolved?
When I started in the business, this entire floor that we're looking at would be covered with paper. And everything was done on paper. I had clerks that worked with me, and they would use a keyboard that you could see in the background where they would hit 7,000, 8,000 keystrokes a day. And we would be trading one symbol and be busy all day long. Before you know it, the bell rang at 9:30, and the next thing you knew, it rang at 4 o'clock. I think what's significant that you've seen grow as volumes has increased, the responsibility of the market makers to the markets has increased. Our responsibility to keep liquidity in the markets, to keep the markets operating. And I think if you look at some of the events that have happened in the market recently, even with COVID and the pandemic, the ability for market makers like Citadel Securities to keep the markets operating, for folks to find liquidity in the market, for companies to be able to access liquidity in the market, those are all vital parts to what keep this economy running.
The term liquidity provision and liquidity provider, how do you kind of explain that to someone who may not be an expert in the space?
The real way to think about liquidity is the ability to not only sell stock, but buy stock, and do it in a way that there's not a lot of volatility in the market. So the main obligation of the designated market maker is to provide tighter spreads, meaningful liquidity for people to access the markets. It's two-sided, both buyers and sellers. When liquidity dries up, you tend to have more volatility in the market. So the ability for a firm like Citadel Securities and our designated market maker business to be providing that liquidity in the market actually helps our companies on a daily basis how they trade. We're charged with the opening auction, with the closing auction, as well as intraday trading. All of those events are significant to companies every day. And our ability as a firm to use our technology and our trading expertise to help those companies continuously trade helps the markets move efficiently.
So really, the designated market maker has a lot of touch points. If you're an investor in a 401k, or you're saving for college, or you work for one of these iconic companies, in the background, the designated market maker is playing a role.
Absolutely. There's a lot of cool places to work in the financial industry, but there's no cooler office than this. To be able to walk into this building every day, onto this iconic trading floor as your office, is something that you take real pride in. It's still providing a valuable service to the listed companies and the investing public. I still get excited walking in this building every day and walking onto this trading floor.
Pete, it's been a great conversation. Thanks for joining us today.
Likewise, Michael, I really enjoyed the opportunity.